What's up, everybody? Welcome to the Stocks channel. My name is Corey and we continue to see a very bullish market, and we're now knocking on the door of brand new all-time highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we continue to see a very bullish market with the S&P 500 going up 0.39% today and getting very close to that next resistance level at 453. Above that, we're basically at brand new all-time highs, and we're starting to run to our next price target at 456. So we continue to see a very bullish and impulsive bull rally, and we're basically just getting a gap and go, gap and go, gap and go, as this market has no chill and no pullbacks. We can see all these moving averages are very positive sloping, and once that 20 simple moving average crosses back over our 50 EMA, we will have the benefit of a full bull trend on the daily chart once more. Remember that gaps typically do get filled. It's not a matter of if, it's just a matter of when, but I don't expect to see these gaps getting filled until we go through the next stock market correction. Specifically the gap at 436, because we have weekly support well above that level. So don't dwell on the gaps below, be aware that they're there, but continue to follow the price action, which is still incredibly bullish. Now there's no doubt we're getting a little far overextended as we come into this resistance at the previous all-time high, so I would not be surprised to see a pullback. But don't just assume that we have to see a massive sell-off, because that's not likely going to be the case. We're more than likely looking for a bull flag look at this point, or something that comes back down to at least the 5 EMA, or potentially the gap close just below right around 443. Now 443 is probably the lowest we would go, because then we would be coming into significant support, and that would close 2 of our 3 gaps. And like I said earlier, I don't think we're closing that gap at 436 until we see a stock market correction. So on SPY, look for downside support at 450, the gap close right around 447.7, support at 447, and support at 444, and below 444 you're looking for that gap close at 442.7. So there is a ton of support just below for the bulls, and all of those support levels will be another higher low, and it will more than likely propel us to a brand new all-time high. Now there's still this possibility the market's just going to blow off the top and we're going to brand new all-time highs without a pullback. I think that's the lowest probability chance, that we just blast through to a brand new all-time high, and I don't suggest chasing this rally. If you miss this rally, just move on and wait for the next buying opportunity, because FOMOing in now and buying at the top makes absolutely no sense. Remember, we were getting bullish down here near the lows when everybody else was extremely bearish, and now we're taking profits and locking them in and getting ready to raise more cash to buy the next dip. This is the time to be taking profits as a trader and not buying in and FOMOing into a rally that we missed. Luckily, we on the Stocks channel did not miss this rally, but I do understand there was a lot of fear and a lot of people did miss this rally, and you really just need to continue to be patient and wait for the next buying opportunity. Jumping over to the NASDAQ 100 triple Qs, we were pretty flat on the day, going down 0.13% and bouncing off of that support at 373. So we see the bulls are buying every little dip that we get in the market, and we can't even see the triple Qs breaking through that support level at 373. Our moving averages are all back to positively sloping, and if that 20 simple moving average crosses back over the 50 EMA, we will have the full bull trend in the triple Qs as well. The only gap we have on the triple Qs is down here around 360, and I don't expect to see that gap getting filled until we see another stock market correction. So your critical supports on the triple Qs are 373 and the 50 EMA at 366, and remember that level will increase each and every day because it is a positively sloping moving target. Below that, we have strong support right around 365, and I do think that's the most critical support level. I don't expect to see the price action going down below that level. To the upside, we have resistance at 378 and 381, and above 381 we're starting to break out to a brand new all-time high with a price target at 388. So we see the triple Qs looking very bullish, and just like with the rest of the market, this is a very impulsive rally, and we're very close to regaining that full bull trend on the daily chart. On the Dow Jones, we were up 0.44% today, and we see the Dow Jones looking extremely bullish, retesting the previous all-time high and getting rejected at that level. So keep in mind, if the Dow Jones is retesting previous all-time highs and getting ready to potentially break out, we're very likely going to see the S&P 500 and the triple Qs doing something similar. We see a lot of money flowing into the Dow Jones sectors, and that's why we see the Dow Jones reattempting to break out first. And as you can tell, if we do break out, we do have a new price target at 360. So we have resistance at 356.5, which is our previous all-time high, and a price target breakout above that level at 360, with downside support at 355, 351, and the gap close right around 349. We're very close to regaining the full bull trend in the Dow Jones as well once that 20 simple moving average can cross back over that 50 EMA. So we're very close to being back into a full bull market on the daily charts, and we already know we're in a full bull market on the weekly charts. On the Russell 2000, we're continuing to see this breakout look with the Russell 2000 going up 0.66% today, and we're getting that second day in a row closing above our resistance trend line and closing above the daily high level just above 227. Remember, the Russell 2000 already has the full bull trend with that 20 simple moving average crossing back above the 50 EMA, so the Russell 2000 is actually looking very bullish. It's not outperforming the rest of the indices just yet, but it possibly could be outperforming in the very near future, and we're starting to get this bullish breakout look, which could be the best time to get in before the Russell 2000 starts to run. Critical support levels on the Russell will be right around 226.5, the breakout level right around 225, and the gap close level right around 223. I don't think the Russell 2000 is going to break below that gap because that would lose the bull trend, and this is just looking too bullish. So strong support would be right around 223 to 222, and I don't expect to see that level breaking down. If we do break below 222 support, this was all just a false breakout, and we're not going to see the Russell 2000 go back into a bull cycle just yet. To the upside, look for resistance at 229 and our resistance trendline breakout level at 232. And above 232, the Russell 2000 looks a lot more bullish, and we could start running to brand new all-time highs all the way up here at 238. On the ARKK ETF, we were down 0.75% today, and we see ARKK closing back above the 50 EMA for the third day in a row, and we're starting to see a lot of these moving averages start to go back to a positive slope. So ARKK is looking a lot more bullish above this level at 116, so watch that critical support level. We still have resistance at 120, which we did fail to break above today, and above 120 you're looking for resistance at 123 and 125.6. Above 125.6 we could start to look very bullish and we could start to run. Look for downside support below 116 at 115 and 113, and below 113 we could start to break down once more. On the VIX, we were down 1.34% today, and we continue to see the VIX getting crushed back down towards that level at 14, which we know is very bullish, and it's very obvious at this point that is going hand in hand with the all-time highs. Remember, the bullish breakdown was below 18.2, and that was our signal we were likely going back into a bull cycle, and the rest is now history. So watch for the VIX to potentially bounce off of these levels, because we could see another spurt of volatility as we get a pullback, because we are getting a little overextended. As long as the VIX is staying below about 17 and 18.2, it's just a short pullback before we go any higher. So look for a rejection at 18.2 or possibly 17, which is our resistance trend line, before the VIX starts breaking back down towards 14. On Bitcoin, we're currently up 2.6% today, and we did see Bitcoin getting to my price target up there at 67,000, and we're still looking very bullish. Remember, this should be a resistance level, so there's no guarantee we're going to break it at the first attempt, so we could see Bitcoin start to cool down now that we hit the price target at 67,000. However, if we see Bitcoin breaking above 67,000, my next price target is all the way up here at 75,000, so that will be your price target to pay attention to. Once Bitcoin gets to 75,000, we could see a very strong resistance level if we don't see strong resistance at 67,000. So in the event that we do get a pullback, your strong support levels are 59,000, the 20 simple moving average at 56,000, and our strong support level right around 51,000. Remember, Bitcoin has the full bull trend, so you do want to buy the dip if you do get the opportunity. And as long as Bitcoin is bullish, you want to hold on for the wild ride because you never know how high it can go. We're still going up on very nice volume, so there's plenty of buyers out there, which tells us we could see Bitcoin continue to go higher. On Amazon, we were down 0.84% today, and we see Amazon still getting rejected at that resistance level at 34.52, but we did bounce off of support at 3400. So if Amazon breaks down below 3400, look for support at the 50 EMA right around 3370, and below that you're looking for support right off that 20 simple moving average at 3325. If we break out above resistance at 34.52, look for resistance at 3500, 35.52, and the gap close at 35.80. On Tesla stock, we were flat on the day, only going up 0.18%, and we did see Tesla still holding up above the support level right around 858. Tesla did report earnings after the bell, so we could have a very volatile day going into tomorrow, and we do see Tesla with this blow off top look, so even if Tesla has a blowout earnings, we could still see a sell the news event. Look for support at 858, the gap close at 843, and below that we have support at 826, the gap close at 820, and the strong support level at 800. If we break below 800 for some reason, look for the next strong support level to be the 50 EMA, which is right around 765. Tesla is still in a very strong bull trend, so you still do want to buy the dip off a strong support, and we could still attempt to break out to a brand new all-time high. So to the upside, look for resistance at 881. On Apple stock, we were up 0.34% today, and we did see Apple getting rejected at that resistance level at 150, which should be a strong resistance. To the downside, look for support at 145, our 20 simple moving average at 144, and our support levels at 142 and 139. With Apple looking bullish, I don't expect to see it breaking back down below 145, so that's by far the strongest support. The breakout level will be back above 150, and above 150, we're likely going to run an attempt to break out from the previous all-time high at 157. On the financial sector, we were up 0.8% today, and we still see very bullish price action with a very strong bull trend. The industrial sector was up 0.63% today, and we're starting to see bullish price action as we're developing some bullish trending. The healthcare sector had a very bullish day today, going up 1.43% and closing back above the 50 EMA, so we're starting to see the healthcare sector breaking out and starting to run, and we could reverse the bearish trending. The energy sector was up 0.81% today, and we still see very bullish price action and a very strong bull trend. So jumping back over to the S&P 500, this is without a doubt a very strong bull market and a very impulsive bull rally. I do think we're getting a little overextended at these levels, but the stock market does not care what I think, and we still could continue to go higher. I don't think that's the highest probability chance, so I am looking for a potential pullback or at least a sideways consolidation from this point. Watch those support levels below, and remember that we are in a macro level bull market and we're very close to regaining the full bull trend on the daily chart. We see the Russell 2000 looking very bullish, so we could start to see some outperformance there. So keep your eyes open and look at all of the sectors across the market and make sure you're not just looking at one portion of the market. Overall, the market is still very bullish, so keep an open mind and let the price action do all the talking, because if you're staying objective, you should be absolutely crushing this market. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts that only trades TQQQs, and with these current market conditions, I think now is the best time to be a bank member. I'm running a 50% off promotion code for your first month, so now is the best time to try out Bank Trade Alerts. You can find out all of the details and how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.